Good morning, guys. Tony Denaro here. Big news of the day. The former CEO and CFO of a $35 billion hedge fund arrested on securities fraud. Let's get right into the details. On Wednesday, April 26, arrested at their homes by federal agents, CEO Bill Hwang and CFO Patrick Halligan of the former Archegos $35 billion hedge fund were arrested and indicted with federal charges. Let's get right into the details here from the Wall Street Journal. Archegos Capital Management founder Bill Hwang and CFO Patrick Halligan have been indicted on charges of securities fraud, wire fraud, and racketeering, federal prosecutors in Manhattan said on Wednesday. Prosecutors allege that the men took part in interrelated schemes to unlawfully manipulate the prices of publicly traded securities in Archegos' portfolio and to defraud leading global investment banks, remember Credit Suisse. They allege that Mr. Hwang's fraud pumped Archegos' portfolio from $1.5 billion to $35 billion in just 1 year. If you don't recall, the hedge fund Archegos famously collapsed in March of 2021. Here we are in late April 2022, a little bit more than a year later, and finally these men are being brought to justice. Continuing on with some highlights from the article, it says banks scrambled to liquidate positions tied to Archegos, rapidly shaving tens of billions of market value off large companies, and when the dust had settled, more than $10 billion in counterparty losses had been handed out from this fiasco, including Credit Suisse, Morgan Stanley, and Nomura Holding. These gentlemen had a complex scheme of investments designed to hide their true investments from banks, and at times they had built up positions as high as 25% in certain companies, and they were circumventing the rules that require them to file when they have more than 10% ownership in a company. At Archegos, it says here, Mr. Hwang built up concentrated positions in companies and held some positions in a mix of cash and swaps. Ever heard of swaps? With money borrowed from banks across Wall Street. The swaps Mr. Hwang favored, which included total return swaps and bullet swaps, gave Archegos the profits and losses on the stocks underlying the swap contracts, while its lenders held the securities. This is all sounding really familiar, guys, right? And this is just the tip of the iceberg of what is going to unravel in the months and years ahead, as all of the positions and the nefarious activity that these hedge funds are doing is going to come to light. As always, I'll be sure and keep you updated as the prosecution on this case unfolds, and certainly let you know the second we hear about the next hedge fund manager, CEO, or executive officer that gets arrested or indicted. I am Tony Denaro. Thanks for catching up on the news with me this morning. I hope to see you on our live stream at market open and market close any day of the week. Don't forget to buy and hold that subscribe button on your way out the door, and I will see you on the next video.
You're talking like you think you think that I'm afraid, but I don't break.